Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Thursday evening, November 19th, 2020. Wow, what a crazy day. You know, the market ended up bid, and then right after the market closed today, Secretary of the Treasury Mnuchin pulled the plug. He basically said, I want all the money back that hasn't been used in the Main Street lending facility. I'm going to end the municipality money that he gave the Fed and some of the general credit money. I don't know why, but he did it. And it's as psychological a move as it is a real move. Now, the reality of the real move is this Main Street program never did take off. We saw the Fed chair, if you'll recall, over the past 3 months, really getting grilled about it as to why it doesn't work. He kept saying it's good, it's going to work, you'll see people come. They never really came in the way that what he fashioned. Why the Treasury, if it's not being used money, has to put it back on the balance sheet when this Treasury is out of the game on January 20th. If you think about it, I don't get. The money's got to come back December 31st. Does it matter for those 20 days? I'm lost with what they did. That doesn't mean that I won't be lost in other things. You know, what am I? I'm just another person out there. But I'm surprised at it. When I take a look at other parts of the market, well, why don't we go to the charts and let them tell us? We're stuck in sideways action. If you don't see it, open your eyes, okay? That's where you're at. Between this high and that low, you haven't come out of that for about almost a week and a half, 2 weeks. Just sort of stuck in here. And when you look at the swing line, you're not in a trend. You have a higher high and a lower low. The trend is stuck. There isn't one at this point. The market is over the 18-day average, so the upside bias stays with the market. We're far away from the Bollinger Bands. If you did what I call, quote unquote, the right thing, first time you hit Bollinger Bands, that's where I think the smart money comes out of part of their positions. And they might have taken the rest off. I mean, this thing just fell apart right after that. So you had a goal. I teach, if you don't get out up there, or, you know, what are you listening to me for? And if you do, and you want to hold positions, it's got to be a real tight stop. You can't give the market much leeway. It's got to glue in and keep going with it. If it doesn't, you get caught sometimes in this, and now you're going, what do I do? Or you turn the profit into a loss, not something you want. When we come to the part of the chart here that's got the slow stochastics, what are they? They're overbought. Any reading over 70 is overbought. They're not bearish, they're not bullish, they're overbought. You have no trend and upside bias. SMH, you're pulling back. So the market yesterday had the outside day down. You pulled back. Today's high in the market, if we take a look, yesterday's high in the market was this one, 201.36. Today you come, you make a lower low. You didn't take that high out. So you didn't have an outside day back up. You do have a market, though, that is desperate to embed. What does that mean? It means that you get the slow stochastic numbers. Two numbers make it up. They have to be at least 3 days in a row over 80 to embed. They're not there. Tomorrow could be the day, but it doesn't bode well with how the overnight markets are doing for that to occur. So I'd be cautious. XLI, if you take out 86.32, doesn't matter. Not when you have an embedded reading, and that's what you have here. So on this market, I have a different attitude. I'm bullish this until this market loses the embedded reading, which means the red line under 80. Barring that, I see the pros buying the pullbacks, looking to get up to Bollinger Bands, and when they get to them, I think they bail on them, and then they start the program over again. I mentioned that the first challenge of a 200-day average along with a Bollinger Band, that's a hard feat to overcome. It's hard to overcome it when you're at the 100. It did it, and when you had the 200 there, you can see it's just been difficult. At least recognize that. That doesn't mean you're bearish. I'm not bearish. You have the embedded reading. So for me, I'm telling my subscribers in the afternoon how to play this market, and I am in the bull camp. QQQ, I want no part of it right here. You're plain overbought. You're not trending. You're overbought. You're drifting sideways. So long. EFA, the emerging markets. Okay, the market's got a pattern of a lower low and a higher high. That doesn't matter. What matters is you're embedded. That means you're buying the pullbacks in this market until the red line is under 80. Want to know where? Take my subscriber video. That's where you get the other moving averages and what I think you have to do with them. In GLD, this is not a pretty chart. You're oversold. You rallied right where we talk about. What do we call the 18-day moving average? What's the other pseudonym that I give it? Line in the sand. Because it's often the zone that the market fights at to figure out direction. And it broke back down. Now today's low at 174.17 took out that low. So we had a pattern up until today, higher lows, higher highs. You never closed over the 18-day average, so the bias stayed down, you fell back. The gold miners, this is the zone to cover all shorts. That's my opinion. Why? First challenge of the 200-day average in the Bollinger Band. I'm in that area. I don't need the last penny. TLT, bullish. Higher lows, higher highs. This market could be targeting the combination of the 200-day and the upper Bollinger Band. The bulls have full control of this market. FXE, well, we had a great day to the upside. The problem is what Mr. Mnuchin did at the end of the day, Secretary of the Treasury. What happened to this? Boy, he's liable to put this under this low. If you take out today's low, look for an immediate challenge of the 18-day average of closes. You need to not take that out, and then you have to embed to say the market's going to come out to the upside of this action. Don't know what it's going to do, so we wait. I have a favor to ask of you. If you like these videos, would you hit I like them? If you don't like them, you can click that. If you don't like them, do me the favor. At least write out the comments what you don't like about them. You may not like me. I can deal with that. I got rough skin. You're going to get from me tomorrow afternoon an invite to my live webinar Monday at noon. So when you get it, it's first come, first serve. Hope you want to come to it. Ask all your questions. They last about an hour. I will cover everything for you from futures to the ETFs to the individual stocks. If you're going to bring ETFs and stock questions, do me a favor. Give me the symbols. I know the commodity symbols most of the time. Done that 50 years of my life. I admit I don't know every symbol out there in stocks or all these ETFs they keep rolling out. Your help, fine. Once we bring up a chart, we bring up a chart and we go right to chart analysis. I like half the time when I don't know even what the chart is because the analysis, it's the pattern. It's what you're looking at. I'm Ira, short at 1 tonight. You have a good day.